Good morning, everyone. Here's this week's week review. I hope that you're all doing well, and let's dive into it. Here we have the news for the upcoming week. We have a lot of high impact news, so we can expect a lot of volatility this week. This is lovely because we have clear draws on liquidity, so this news will be used as manipulation intraday to create opportunities to maybe engage on within the marketplace on your demo account, of course. Here was the chart that I posted for the Dixie last week. I said the risk-off scenario is in play, meaning that smart money would rather throw their capital into the dollar for fairly safe yield instead of putting capital at risk in the more risky markets such as indices. They are literally taking risk off. What is this? This is a market maker buy model. Why is it a market maker buy model? We trade into a significant price level where smart money reversal could have been expected. Then we saw clear displacement to the upside in the form of the market structure shift pattern right here. Imbalance here on the downside, a CB, intermediate term high gets broken by a BC, market structure shift. Market retraces, boom, off to the races. That was our expectation. I said keep an eye on this CB right here. We traded above it and now we expect it to act as support. Why? Because this is an inverse CB. This is not a BPR. No, it's a reclaimed CB. It would be a BPR if a BC broke this CB. That's for your notes. So, okay, what my draw liquidity now is, because this is what occurred on the Dixie. The January high looks like money. This looks like easy. December high looks like money. We have a volume imbalance right here between the last candle of November and the first candle of December. There's a volume imbalance. This should be on your chart. If we trade above that, we can trade into this CB right here, tiny little CB. And if we trade above it, I want to see it act as support. If it acts as support, a run through to this premium CB right here and this imbalanced price range right here is like, it's just a no-brainer. And if we trade above that, man, these highs are too clean. And if that's the case, man, ES is going down to the previous year lows. But let's not get ahead of ourselves. First of all, this week, January high, December high, and this imbalance right here. Clear draw on liquidity. Here was the chart for the GBP USD that I posted in the weekly review of the 12th of February. I said, okay, we're drawing to the previous month low. This imbalance right here, which is, I believe, a weekly imbalance. I'm now on the daily chart. Should be on your chart. It's very important. We want to see this act as resistance now that it has got broken through. And it did beautifully. So, to my eyes, previous month low looks like money, easy. If we trade above that with significant displacement, here, this discount FEG, this discount BC, is also a no-brainer. And if we trade below that, man, these lows right here are too clean, and this would correspond with a really rising dollar. The dollar is, in my opinion, a wrecking ball right now, and you shouldn't stand in the way of this trying to long anything. Risk remains off, so therefore we look for market maker sell models to unfold in all these other markets. Here was what I annotated for ES in the previous weekly review last week. I wanted to see a bit of a higher Judas into the previous week opening gap, but hey, we didn't. But I said, okay, use FOMC and G20 news to reprice lower. I want to see a high of the week a bit here and then off to the races. Unfortunately, we did not get this full retracement, but on Monday, or was it Tuesday? I don't know. I can't tell. But I made another analysis and I said this. I posted this chart on the 21st of February. I said it is possible that we will not see a deeper retracement before dumping. We'll see. When I get to the final weekly delivery, I will explain to you why I expected this. I posted this as well in the indices channel, so if you want to take a look at that, just scroll up and you will find this message. First of all, I want to ask you this. Here we are on the ESH chart. This is the 4-hour chart. And I want to ask you, what do you see right here? Pause the video and try to think about what you are seeing right here. Combine what I've shared so far within the lectures and within the breakdowns and within the reviews, and use that knowledge to take a look at this chart. I hope that you paused it, because I'm now going to explain what I see. I see a market maker sell model. Why do I see a market maker sell model? Okay, we have an original consolidation down here, sell side liquidity gets engineered, then the market starts to trade higher and the buy side of the curve starts to get created. What do we see here? We see a really big trend line being engineered. Just put a line from this row all the way through these rows and extend that to the right. And how would a retail miner trader think or interpret that? They would say, the market is trading higher, so therefore we need to buy it, and let's place our stop loss below a low, because that's what the market is supposed to not trade into, or below, because the level where the market refers here is a support level. Well, we of course know that this is not the case. We know that the market is drawn to liquidity in the form of buy stops or sell stops. In this case, it is drawn to sell stops. Where do sell stops rest? Below all the lows. So, why is this a real market maker sell model? Well, we had a Judas swing higher from the yearly opening. Remember that chart that I talked about last week? And I wish I got a bit emotional actually. I said, okay, yearly opening is here. The market has been trading higher, has been pushing higher. So the uninformed money looks at that and think, we are off to a good start of the year. Let's go! We're going to new all-time highs. Let's go, boys! Well, we were just waiting for this buy-side liquidity that was above here, the 40-day high look back, to get purged, trade into this order block and old volume balance. Boom. And why the market didn't continue higher, or when the market didn't continue higher than this high right here, this was the change in the state of delivery, this last green candle up. So therefore, we could see a market maker sell model unfold. It was too slow right here, too absolutely slow. This was price being held in a consolidation, liquidity being engineered. Once we broke away from this consolidation, or outside of this consolidation, we can now determine our clear draws on liquidity. Because in here, price was still trading within this BC, within this wick right here, within CE actually respected perfectly here, with the lower quadrant being respected perfectly here. And it was, it was, in my opinion, okay, I was aiming more to the downside because I was bullish on Dixie, on dollar, but I could still see why people were bullish on ES because of all of this buy-side liquidity right here. But because we have now created significant displacement on the downside, not only breaking this intermediate term low right here, but also breaking this intermediate term low right here, to my eye, this is an obvious market maker sell model that will unfold very soon. I said if we break below this low right here, 3900 is next. That's what I said in the previous weekly review. And you can also see it here. Break this low and 3900 is next. Well, the low has been broken, so 3900 is the next strong liquidity. And in my honest opinion, December lows are also coming because these lows are too clean. And I think that this is just so beautiful right now. I'm looking for market maker sell models to unfold throughout the week. And I think that once we trade below 3900, we will have to reassess what is now likely to do. If we see a significant displacement below this low, okay, we could see a scenario in which we have a very big range day or a few big range days, but preferably I just want to see boom. No purge on liquidity, so no purge and then revert. Yeah, sure, we can revert once we break below this low into this old BC right here, find resistance there before selling off, but I do not want to see a very deep retracement after this low gets broken. I want to see it nice and clean. So boom, maybe purge, retrace a bit, sell off more. Because this is the original consolidation and this is the final terminus for this market maker style model. If we would zoom out more on the ES chart, I think that there's a even more obvious market maker sell model to be justified on the higher time frame chart, and that's from a macro perspective. And I believe that the ES is going to trade to the previous year low, and this would correspond with the Dixie going through new highs. So here was the weekly delivery, not that spectacular in my opinion. Yeah, sure, it was clean, but this was just a beautiful distribution week. We had the open right here on Sunday, then we trade above the new week opening gap. What is the new week opening gap? Look at Friday's closing price, put a horizontal line there, and put a horizontal line on Sunday's opening price. Then we trade above it. Boom. Why did I say that we were likely not going to see any deeper retracement before selling off? Because this right here didn't hold as support. We trade above it, but we trade below it again. And you see what happens next? Boom, resistance, sell off. But if we were going to see a deeper retracement, it should have found support here. Up, down. It didn't. So therefore I felt confident in saying, okay, it's possible that we do not see a deeper retracement before selling off. Then we see a trade below this BC right here of Friday's delivery. Trades below it right here with this big black candle. Here it is just consolidating during the Asian range. Consolidating. Up on Tuesday. Creating a Judas swing up. Probably during London. No, not during London. A bit before London. And then we trade below the BC with this big black candle. CB gets created. Retrace. Why does the CB gets repriced into fully? Because of the low of this BC that got traded into. This is perfect delivery. Then we see a sell-off on Tuesday. Again, consolidation. FOMC minutes in the afternoon. So what is the market doing? It's engineering liquidity. It's engineering liquidity. So therefore we saw a Judas swing up during the PM session. While the FOMC minutes released, Judas swing up, and then a market maker sell model unfolded within this one particular candle right here into the AM low. You can look at the trade breakdown of the 22nd, I believe, or 23rd. Yeah, it's 22nd actually, on Wednesday actually. Then we saw the market retrace. Consolidate. Boom, Judas swing up into a daily CB, creating eye of fat into this hourly CB as well. SMT with Nasdaq here. Boom, market maker sell model, sell side liquidity, London lows. Boom, previous day low. Boom, taken. Retrace into this order block right here. Consolidate. Boom. Distribution lower into the previous day low. Then we trade into the low of a daily BC. Beautiful reaction to that. Retrace. And close in this 4-hour imbalance right here. So anyhow, that was this week's week review. I wish you all the best. I wish you good luck in your development and be safe. See ya.